Right, we are ready to go. Welcome to this edition of Traders Roundtable. This is week 13, I believe. Let me just double check that. Yeah, week 13. And key to the week is inflation, because we've got US and UK inflation tomorrow. So we'll take a look at the charts with that in mind, and we've also got US GDP on Friday. Otherwise it's a little bit quiet, not that much UK data. UK retail sales on Thursday, weekly jobs for the US on Thursday as well. And I've got an event on Thursday. It's about Tradeonomics, 11 AM GMT, which is 7 AM Eastern time. Do join me, it'll be fun. I'm going to sprint through quite a lot of work on correlations in the markets, cycles, and timing, how to time your trades, and what to look for at certain times of the year, etc. And certain times of the week as well. And it's about day trading as well, so I'll tie in the aspect of inflation this week, and we'll look for the data that's coming up in the next couple of weeks as well. Right, that's enough of that. So let's just look at where we are on these markets. I like the US dollar yen. We'll start off with this hourly chart. I like the fact that we are still very much in this FOMC box. And the FOMC box is the box created by the session last Wednesday on the FOMC. Let me just get rid of that. Excuse me. And I just think we've pushed. So we had the sell-off, had a move to the downside, which flushed out the weak hands because this was just going nowhere. So that broke down. Then we had a snapback. Well, not hardly a snapback. It took quite a few hours to get back to where we broke down from. And here we are back down to the target breakdown area. So that's why I bought it. There's a lot of support down here. You can see that on the left. Oops, that's not what I wanted. I wanted this box again. A lot of action down there. And excuse me one second. I do apologise for that little break. Anyway, that's what I'm looking at. I think it's one of these low risk, potentially high reward trades if we can get going. And so, excuse me, I have to just clear my throat. Sorry about this. Right, hopefully I am ready for this session now. And so, yeah, I like this. I think it's got a lot of support. Now let's just go up the time frames. Let's look at the 3 hour. So we've got all this fib support on the 3 hour. So you can see I've got the fibs on this move here. See, that even forms part of a channel there, which we did break down from. But you can see we're holding this fib level, so if we can build up from there, just under the 120 as well, which might make it a bit tricky, but stochastics are low on this, nice, very nice and low. Divergent RSI, so it's got a few things going for it. If we look at the daily, you can see we have a hammer-like bar just sitting on this 50 EMA. And while we've got the daily up, let's look at other yen pairs. Look at the pound yen. So we've got inflation tomorrow in the UK. You can see we are sitting on that 50%. But we are so range bound. That could go either way. If it does, I have got a small position at the lows on this, but nothing much to speak about. If it does blast off without us in one of those algorithmic blast offs, not to worry. I think we will just come back either hours or a day or so later and retest that area. Otherwise, it could blast either way. And the setup we've got here is one that you don't see too often, where Friday's bar sat in Thursday's bar. And Thursday's bar still didn't breach the highs and lows of the FOMC. But the point is, all the time we're in this little range of 178 and 180. You've got the chance. One way of trading it is to literally put a limit order to sell at the lows and buy at the highs. And whichever one gets triggered, the other one forms your stop. But a lot of people did that prior to algorithms. You don't find many people doing that these days, because what was happening was people getting triggered on both trades and making quite a mess of their accounts. So the safest way of trading is just to it is sideways, it is difficult to call, it's back off and then see where we are after the data. I'll look at the data 15 setup with you for everybody's in the room, and we'll see if that works. I'll refine that because it hasn't quite worked for me the last couple of times, but overall the percentage success rate is very high, so I just fine-tuned it just to adapt it to some of the bigger, more violent moves. Okay, so I like the way the yen pairs are working. The euro yen's had a decent move today. Not a bad move. I put the fibs on the low of Jan 26, and that's a very good sign. We open and close above this 130, and we could see 135 at this rate. It is on a clear downtrend. Let's look at Elliott wave. We've had 1, 2, 3, A, B. So we've got C wave correction in the process, and the D wave could be the big move that takes that down to 120. The question is, where will that push to? And I mean, if we start closing above this 50 EMA, that may not even happen. But it's in a clear downtrend. We got very, very extended to the downside, and we've had quite a substantial step up, a few hundred points. And so we just need to watch that one for the D wave to start. The most likely place is somewhere around here, because there's just so much resistance on that 50 EMA. But that's a couple hundred points up. So in the meantime, if you are counter trend trading that, that's fine, and that's not a problem. There's no reason why you shouldn't. You don't need to hear that from me, but just be wary of the trend. Let's look at the weekly on this one, because it's such an interesting chart. There's the stopping bar. The fibs is on. That's a good question. Right the way back here, October 2000 to the high that July 08. And so we have a stopping bar under the 50%. At the moment, we're just poking ahead above that 50%. RSI is just coming off the 30 level, and this stochastic is beginning to twist to the upside, having been very extended. So the yen is seeing some weakness, which is benefiting these pairs. Right, whilst on the daily chart, let's look at the all dollar pairs. So here's the US dollar CAD. Now oil's been picking up, so that is a benefit for the CAD. So the US dollar CAD has been popping to the downside, and this is a potential nice move into the daily 50 MA with the US inflation tomorrow. So if you're a day trader, watch that 124 level. Could easily dip into 123.50. That could potentially be a nice buy area, because this is a bullish consolidation. And all the tests of the 50 MA all got bought so far. There. Once we break above these tests, they just got bought. And we had a swift move up where we hardly saw the 50 MA. This is the first test of the 50 MA since all the way down here in early December. So one more, don't forget what we said about waves in the past. If you get but the pullback is generally complete after a 3-wave move. So we had 1, 2, 3 here, break. So far we've had 1, 2, 3, 4 before we. No, it's about, we can argue that's just 3 and go. So now we're just getting a 1, 2. So a dip into this area here could see that push back and go and attack 130. So let's see. It's a lot of selling up there. Let's wait and see. I certainly wouldn't short it above the 50 MA. That's a general rule. You are counter trend trading if you are shorting above the 50 MA. Counter trend trades are fine as long as they are measured and you're not risking too many points. It's much better to trade. These are trend trades. All these dips are trend trades. These are counter trend trades, but if they are with full reversal setups, that's fine. Okay. Good to see you. I was so busy talking, I didn't realise you guys are coming in the room. Any questions, post them in. I can't guarantee I can look at them straight away, but I'll certainly have a look at them once I pause and come away from my charts a second. Okay, so other dollar pairs. Let's look at the pound US. So it actually had quite a nice, you look at the 15 minutes on this one. I mean, Fibs is the key, is the code, unlocks the code. Fibs unlocks the code, and there is the FOMC move from 146.33 to the high of 151.66. And this morning out of the Euro session, we put a hammer on the lower part of the fib zone, and guess what, we came up to the top of the fib zone. So that little retest there in that zone was quite a nice little move, and that gave you 850. Yeah, you got 100. There's 100 points available in that one if you'd sat in that into the US session. Fibs unlocks the key. Fibs is the key to unlocking the markets, I should say. So I'm not concentrating on what I'm saying. Okay, so, and then that of course has left us with that daily chart, which is poised to break either way, and we're still sitting in the FOMC box. That's the box created by the open and the close at 18th, and this is the actual range of the FOMC, which we're just sitting in. So the fact we're on the upper end of it could mean they're poised to break it, but we will see. If you were in the room on Friday and I called the Dow, I actually took 70 points off the Dow into the second half of the session. But this is the reason why I called it. Hang on one second. Because on Friday the 20th we had this little hammer here, tested the 50 EMA, and then you know, stopping bar on the very next bar, and it just ground up to 200 and then sold off in the close. So I took it down here and then took it off at 200 because most other people were taking it off at 200, so I thought, why not? Alright, that's why I took that, that's why I called it, so just watch out for that. Notice how on the big FOMC move, you know, we didn't quite get to the 50%. We held this top of the zone at 962. So just watch out for that, fibs, and it helps you lock the code of trading. Right, what do I want to look at now? Any charts you want to look at? Any charts you've been mulling over, trading or whatever? If you're going to write anything, I'll come back to it. I'm just going to look at the gold and oil. So the weak dollar is seeing a push up in the gold, which is hitting the pound Aussie. That looks as if it can do a full 1200 retrace and possibly 1230, 1250 if the dollar stays weak. And this is oil. Still not a very impressive daily chart, but it is nonetheless inching up, looking as if it wants to test 50. That was even good at the open on a 5-minute chart. Is that the open? We had a hammer into the last half an hour, and then we had this was the opening range. That was the opening 5-minute range, and we sped up to 47.17 an hour and 20 minutes later. Right, enough of Forex. So just to recap then, I like the weakness of the yen for the particularly the US dollar and the pound yen, sorry. US dollar yen and the pound yen. We've just got to get that data out of the way tomorrow. Otherwise, so look, one thing we didn't look at was the. Just want to show you this instrument. This was good. You can see how this one. See, I had the fibs on the lows of the 18th and the high of the 19th. We looked as if, in the early part of the US session, we looked as if we were going to pop up. But we immediately closed, once we closed above that fib level, we closed below it, threw a reversal bar in, and pretty much sold off the rest of the day. So I mean, looks as at a certain various points of the day, looks as it's going to turn, but it doesn't. It just any higher just gets sold into on the pound or the dollar. So we're now left with a daily, which is pretty weak, right? And that's because gold is coming up. The weak dollar is pushing the gold higher, and so we're seeing a lot of strength in the Aussie, which is killing this Aussie dollar. So you can see we kept rejecting the 50%, the 50 EMA I should say. Yeah, and this is the daily chart, and eventually you just made a couple of lower closes, a couple of red bars in there, 2-3 red bars under that 50 EMA, and today we've just dropped out of it. And this is where, if you have this range, it's got to watch out for that range. So that area now, 19135, is going to be a key pullback area for a potential another drop, unless of course we close back inside there pretty quick after inflation tomorrow. Just noticed all the selling. Notice the selling that was going on every time we touched that level. $195. So if we fib that, yeah, we are coming to low RSI. And also, I mean, it's a lovely example of Elliott waves. I've done it. I'm sure I've done this. I know I've done this in a couple of videos. 1, 2, 3. So this is this looks a bit of an A, B, C wave correction there with a D that fails. I think this is wave 1, 2, 3. So Elliott wave says this is an A wave correction. So at some stage we're going to get a B wave up. A, B, C, D. When we get D, we might end up at 200. So I'm looking for this kind of pattern and this kind of pattern somewhere around here. But in the meantime, that has been a great short, particularly today, of course. Fib it, fib the whole thing. Look at that, we're sitting right on the fib zone. So if they're fibbing it to that level, the full pullback could easily be 186. Inflation tomorrow will tell. There's an ant on my chart. Don't follow what you're saying there. Maybe it's an ant on your screen, I don't know. Okay. The stock sectors I like, because of the way the oil is behaving, I really like the oil sector. This one, Valero, has been on its own sheet anyway, even though oil's been weak through the first quarter of this year. That one has stepped up really nicely. So you can see the let's look at Elliott wave in this one. That's like 1, 2, 3, A, B. If we get a C wave correction, particularly on this box somewhere, on the top of this box, 59.60, I could expect, bear in mind this had a lot of relative strength when oil was weak anyway, this one could really motor. If we step back from this one, we have history going right up to that level there. So we were actually playing, just undershooting the 50 MA up 50% there. And at the lows on October last year, we were hitting the, oh we weren't, that's my box, isn't it? Anyway, we were just overshooting the 50%. When we closed up, we started getting a nice move once we closed above that 50%, and we hesitated at 54.20. So I would keep an eye out for that one. Other ones, let's look at the drillers, the rigs. Diamond Offshore. Struggling. But if that gets above 29, DO Diamond Offshore could go. It may be just one of these, this sector's beaten up, the oil rig count's pretty low, and the price of oil is very weak, very diluted. Divergent RSI, low stochastics, so watch out for this one. I would certainly bite on that one at 29.20 if we close above it. Parker Drilling, PKD, and this one's already had three-way reversal. So if we start holding 322, this is a cheapie. Just got to be careful of these cheapies. I would certainly risk, if we open and close above there again, I would certainly risk some money on that one. Schlumberger, so oil equipment supplier, beaten up, clear trend line, but we're in an apex, so start closing above 85, and that one stands a good chance of recovering. Now, what you've got to bear in mind that we could just hit that 50 MA and that trend line, and then just collapse. So you definitely need to play safe and wait for confirmation on that one. Otherwise, that could just hit that buffer and then just completely roll. It's a big stock, but nonetheless, just be careful of that setup. And let's have a look at a couple of other oil stocks and then we'll move on. I'd steer clear of that one. That's not a particularly clean chart. Exco has been good in the past. Okay, but they're all very similar. I just think if you've got a balanced portfolio, then some of these stocks can go in your portfolio just to see if, and the oil is going to pick up at some stage, could easily be 6 to 9 months. But this is a time where oil is beginning to pick up and the stocks are reacting accordingly, and that could be a good one to watch. Let's just look at some text and then we'll get away from these screens. Where's my text gone? This is Juniper Networks. This is the kind of stock that reacts well to steady incline in the indices. So this one's been picking up since January anyway. Computer network outfit. Let's look at another one. That's already gone. A bit of a choppy chart there. Facebook's gone mad. I'm just going slightly off the subject. Facebook's had a good run off that 50 MA again. If you look at the waves, we've had 1, 2, 3. This 72.50 was a major fire line, and that got bought all through the summer and the autumn. Bit of a sell-off there, but then they just started buying it again. Push up. This is, but now we are just making new all-time highs. Let me pull back on price level of 81. I think we're going to see a lot of traders come in at 81 for that to rotate back to the uptrend. So an update on Apple. Graham said this is in the Dow now. Sweet move. The waves on that one are pretty obvious. Interesting how this paused in December and then got going mid-January. Nice setup. Let's have a quick look at the list that Graham put up. And then we'll call it a day. Some of those on my list were already stocks I like anyway, which is always a good sign. Herbalife. Nice rounded bottom. I'm not a great fan of that one, so I'm going to leave it just because of the pattern. Sienna, and I had Sienna on my list. Let's see, there's Sienna. And that is a very interesting pattern. Three distinct waves, so I would wait to see how that one wants to handle that. Looks as if it's had a lot of short selling at that resistance level. Now we're just into an apex. I'm going to close underneath that, and that's a good short, potentially a good short. But start sitting in there in the apex and closing above 21.30, and that's a good long. Let's leave it there. I need to get away from my screens now, but we've done 40 minutes. That's quite a long time. Let me stop the recording. Don't forget that event on Thursday, 11 AM GMT. If you haven't got a link to that, let me know. It's on the email. And Trading room is open tomorrow at 8 and 12. That will be 8 and 1 once the clocks go forward next weekend. Any questions, let me know now. Final call for questions. Otherwise, I'll just stop the recording.